Dear students, we welcome you to our classes conducted by our YouTube channel SL Account School. Today's topic is accounts prepared from incomplete records. Incomplete records refers to a situation in which an organization is not using double entry bookkeeping. Instead, it is using more informal, mark the word informal accounting system such as single entry system or some memorandum records to maintain a reduced amount of information about its financial results. Under the single entry system, usually the cash book is maintained, sometimes debtors and creditors details. They don't maintain income and expenditure, assets and liabilities properly. But as a rule, you cannot have a definition for incompleteness. It can lack details in so many different ways. As a guidance, they give 3 steps to record these incomplete records. Preparing an opening statement of affairs to ascertain the capital, complete the missing details with the available data, and proceeding to prepare P&L and balance sheet. Ingenuity of students and their logical approach backed by their accounting knowledge can be helpful in these circumstances. There can be two situations. One is no records at all. Say for an example, if you have the opening and the closing net assets of the business, you can arrive at the profit subject to any introduction of capital or withdrawal of capital. The second situation is where records are there but not complete. There are few standard techniques with which this can be resolved. If opening capital is not given, by adding all the assets, deducting all liabilities from that, the balance sheet figure will be opening capital. In the case of purchases and sales, there are 4 elements if you look closely in each of these accounts, which are opening balance activity equal to closing balance plus settlement. Out of this, if 3 elements are known, 4th one can be derived. Next, missing figure for cash, where opening and closing balance are given along with receipts and payments. If it doesn't agree, it refers to cash withdrawal or drawings. We think it will be useful if we look back at our lessons, what we have learned previously, namely accounting equation. Every transaction is an equation, every account is an equation, the entire business is an equation. What business owes, what business owns. Asset equal liability plus equity. Same equation can be presented in different formats. For an example, asset equal liabilities plus equity, equity equal assets minus liability, liabilities equal assets minus equity, and so on. And few more, sales minus cost of sales equal gross profit, opening stock plus purchases minus closing stock equal cost of sales, gross profit minus profit and loss expenses net profit plus profit and loss expenses equal gross profit. Hope students have understood. Now let's look at some illustrations. 1. In this, opening net assets is given, closing net asset is given, the movements in the capital account is given, and we are required to find out what the profit is. Please look at this working. Opening capital 128, capital introduced 50, less drawings 48, giving you a balance of 130. Closing capital or net asset is 184,000. Therefore, the difference will refer to the profit made, which is 54,000. In the second illustrations, we are required to calculate the purchases. Opening balance is given, closing balance is given, 4 transactions are given. Let us put them onto a T account to see how it is. Payments, discount received, and closing balance on one side as against opening balance plus goods taken personally, drawings, refund from suppliers for returning the goods could be 2,400. So the balancing figure is purchases, which is 930,050. The third illustrations, information needed for cost of sales are given, but no sales are given, but a formula is given. Opening inventory plus net purchases minus closing stock will give the cost of sales. As per the formula, 33 and 1/3% is made as a profit on sales. Therefore, the sales figure is 803,250. The next illustration, we are required to calculate the sales. Here again, opening balance, closing balance, and few transactions are given. Cash plus, return inwards plus, bad debts plus, closing balance plus minus opening balance. The balancing figure is sales, which is 190,000. Since the question is about total sales, cash sales of 140 is added, 330 is the answer. In illustration 5, opening assets and liabilities and closing assets and liabilities are given. Few transactions are given. To make things easier, capital figure is also given, but that also can be calculated from the information. However, no sales or purchases figure is given. We will have to calculate them, and we are required to prepare trading, profit and loss, and balance sheet. As you see, details regarding debtors account is plotted onto a T account. The balancing figure 660 refers to sale. Similarly, when you plot the creditors account, you see a difference of 495, which refers to purchases. In the trading account, opening stock and closing stock are given. Sales and purchases have been calculated. Gross profit calculation gives 150. To that, discount received is added, and discount allowed sundry expenses are deducted, giving a net profit of 80,000. As you see in the balance sheet, movements of capital account, that is opening balance plus net profit minus drawing, is 275 added to the sundry creditor, which gives a balance of 450. On the asset side, assets are listed and that tallies. The next question, capital introduced 400, furniture purchased for 80, sales are given 500, out of that cash sales is 200, therefore credit sales 300, purchases 400, cash purchases 120, therefore credit purchases 120, balance transactions are given. As you would note, cash balance is not given, and payments made to debtors or creditors are also not given. In the case of sundry debtors account, closing balance is given, a transaction is given, sales figure is given, the balancing figure is the cash received from debtors. In the case of sundry creditors, the balancing figure is 200,000. In the cash account, all transactions given are entered, plus sundry debtor and sundry creditors, which we have arrived at also given, giving a balance of 252 as balance cash. Now look at the trading and P&L that have been prepared by all the information given in the question. In the case of balance sheet, except the cash figure, all have been given directly from the questions. Now let's move on to the next illustration. If you look at carefully, all details which is needed for a balance sheet is given, nothing about income or expenses, but they want us to arrive at profit and loss account. The only way to do is to match the closing net assets, the opening net assets, which is 80,000 capital only. A statement of affairs is prepared in order to arrive at the net asset at the end. All assets are total less creditors and outstanding electricity bill, leaving a balance of 83,550, which is the capital. To that, capital introduced and drawings are adjusted, leaving an adjusted capital balance of 106,550. If you match that with the opening 80,000, the profit has to be 26,550. In the next illustrations, an extract of cash book with receipt and payments are given. Opening balance sheet and only the closing balance of debtors and creditors are given. As you would note, no cash balance is given, no credit sales and credit purchases are given. When you plot all informations given in the question into a cash book, you can arrive at the closing balance of cash account. In the debtors account, 3 out of 4 informations are available. Therefore, the fourth one refers to credit sales. Similarly, in the creditors account, 3 out of 4 informations are available, the fourth one being credit purchases. We have all details needed to prepare the trading account. In preparing the profit and loss account, we were given 2 adjustments: an accrued expenditure of salaries 480, 5% of the debtors figure as provision for doubtful debt, which is 5% of 7,200, 360. All other details are from the question itself. In the case of balance sheet, debtors account is adjusted with 360 provision for bad debts and an accrued expenditure of 480 shown in the liabilities account. Movements in the equity account or the capital account, adding the capital introduced, reducing the drawings, and further adding the net profit has given us the balances to tally the balance sheet. Dear students, as we said earlier, incomplete records can come in different forms. So you will have to use your accounting knowledge in order to solve those problems. We recommend you do more and more exercise in order to get a better understanding of the subject. Dear students, as you know, these classes are provided to you by our YouTube channel, Excel Account School. We kindly request you to share, like, and subscribe. Thank you very much.